Morning everyone, it's Monday the 18th of April. This is going to be a very quick morning brief. Obviously there was some market moving news over the weekend in the fact that the Doha summit between 16 oil producing nations ended in stalemate. I think if you look at what I've got here is on my stare, I've got a chart of crude on a 60-minute. Now for the last few months, as you know, you've seen crude price appreciating, following a lots of this, market talk of stabilising oil prices, halting, increasing levels of production of oil. Now, add into that, you've got Iran coming out of sanctions, increasing supply, and then you get, so you've got an appreciating oil price leading into this summit of the weekend. Friday we saw, some people take some profits. I don't think there was a lot of, people knowing in advance of what was going to be happening. And of course, on Sunday you started to hear rumblings that Saudis were not happy that Iran won't be part of this deal, and that they want to sell oil at any price that they can and not lose any market share. So all in all, what's happened is you come in Monday morning. I watched the open last night at 11 p.m. You got oil, crude open at like just under 42. That's where it opened, the opening price. Gap down literally $2 in the blink of an eye, as you can see from the chart here. And then I waited for a little while, recuperated a little bit. And this is where we are now, 41.20. Now, alongside this, you've got Japan earthquake that people are talking that's going to impact second quarter growth. You've also got earthquake in Ecuador as well. And you already had a bullish treasury market and a little bit of a bearish market on Friday in the equities. So as you walk into Monday morning, you would have expected, a tidal wave, a huge sell-off in crude. You'd have expected treasuries, bunds, and gilts, short sterling to be hugely rallied up. But that's not really the case. So if you see here, this is the 10-year note treasury future, trading 26 and a half. That went off the board on Friday night at 10 o'clock when it closed at 20s. So it's only up like six and a half ticks. I mean, that's nothing, that's a blink, right? So in terms of market moves, crude's lower, treasury slightly higher. What you got here, I've got Euribor June deck, I've got Eurodollar June deck, front June deck, and sterling June deck. As you can see, the Eurodollar June deck is down about 1.5 ticks, settled about 15s. The European, so the Euribor is unchanged, and the short sterling June deck is unchanged. And you can see that in the bund price. Bund price is trading around 164 even after opening up to about 164.15. So market is muted in terms of how much it's moved. The curve, the US curve, as you would expect, with a little bit of an uptick. You'll see the front part of the curve down a little. So this is the treasury curves again. This is down a little bit. You would expect to see that in Schatz Bobble and 2s5 sterling, to see a flattening with the rally in the long end. Then you usually go along here, 5s, 10s, 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 and 10s, 30s. What you've got is, as you go down the curve, slightly more and more bid down the curve, as you see outrights up. Okay, you would expect that same shape in Europe and in sterling. Now, given the propensity of the move in the treasuries being so muted and the curve being so little unchanged, I think today's going to be a quiet day, right? So it's absorbed this on the chin quite well. So in terms of data, again, it's quite light. So in terms of the week, until you get to Friday when you got some flash estimates of European manufacturing, and of course ECB press conference, it's quite light. So you're probably going to see quite a light trading range, unless you start to hear talk coming out of the OPEC and non-OPEC nations saying that, despite they didn't reach impasse yesterday, that they're still working towards it. I think that's what's stopped the fall in crude, right? So it was important that when they came out of the meeting, it wasn't like they walked all these OPEC nations and non-OPEC nations. They didn't come out and say, well, that's it, it's over, there's no discussion. I think what happened was they're walking out saying, right now we're at a stalemate, but it will improve. We will find a way to stabilize pricing, right? And then also the fall in crude was softened a little bit by a supplies issue in QA. I think that's about it. Good luck, everyone. As per normal, ping me with anything you need me to talk about or produce. Again, it's very quiet.